Hello and welcome back to the next video. So let's just go ahead and we're just going to go ahead and pick one. So I'm going to change this right here, strikes. I'm just going to change it to, let's just do 8 so it's a little bit clearer. So now what you're going to see is you're going to see here, you see right here it says calls, and here you have puts. So calls, what that means is you want the stock to go up. So you think that, so right now we're on, it's March 7th. And so these expire every Friday. So I'm going to get into that. That's what these dates mean, right? So the 12th of March, 19th of March, 26th of March, these are all Fridays. And so options always expire at 3 p.m. Central Time or 4 p.m. Eastern Time on Friday. So you have until then to execute the option, and we'll get more into that. So here I just picked March 19th. I just picked a random date. So here we are, we're looking at this option chart. Again, here's some Greeks, delta, theta, which I'm gonna get into in the next video. You have volume and you have open interest, which again, I'll get into. And here again, you see the ask, which is the same up here. So it's a little bit cheaper because it's different prices. And so ask, again, ask price is the price you're willing to pay, and bid is the price you're willing to sell. And again, with options, you need, if you're gonna be buying an option, someone on the other end has to be selling their stock or option for in order for you to buy it. So the way options works is there has to be a buyer and there has to be a seller. So first you pick if you think you're gonna do calls or puts, and we're gonna kind of get into that when we start doing charting on how to predict if the stock's gonna go up or down. So again, calls is if you think the stock's gonna go up. So you think maybe it's trading at 121, and maybe by next week or March 19th, you think Apple might be around $130. Uh, but say you think that maybe uh, Apple had some bad news or there's some negative press going on with Apple right now, and you think the stock's actually going to go down. So you think maybe by March 19th, the stock might actually go down to say $115. So if you think the stock's going to go down, then you could play puts. So puts again is if you think the stock's going to go down, and calls if you think the stock's going to go up.